This week, we're talking beef cow slaughter and cold storage. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Kentucky's Kenny Burdine. Kenny, great to see you.
You too. Good afternoon.
I would say happy May, happy June by the time most people see this. I feel like we are rapidly moving through the year of 2025.
No doubt. I was talking to a friend I guess it was yesterday on Thursday, and I said something about, well, that won't happen till June. And I'm like, wait, that's 3 days away. So
it is. So it'll be a fun summer months ahead. We'll get into those reports a little bit. We'll talk a little bit about what's been happening this week in the cattle industry and what's been happening in the markets. But first, let's recap another week in cattle and hog markets.
Sounds good. So as I always do, we'll start with the 5-market fed steer price. It was up $2.61 this week at $229.58. June live cattle futures were essentially unchanged, Meghan, settling at $215.47. I think maybe down 33 cents a hundred or something like that. Choice box beef was up again this week at $366.34. One of the interesting things about doing this every 3 weeks, it's easy to go back and look, and I think that's up almost $20 from 3 weeks ago. So I couldn't help but mention that as I was kind of going through this for the show today. August feeder cattle futures were down a little bit, but closed Friday, so closed today at $298.68. So just under $3, been kind of hovering there for a bit. National base hog carcass price was up a little over $1, $92.73. Pork cutout was a little stronger this week, $109.40. And then June lean hog futures up about $3 on the week, $101.28 today.
I want to talk about this continued rise. Obviously, we've been talking about it on cattle prices, whether we're talking the fed steer price or we're talking cattle futures. But the box beef, as well as you say, 3 weeks ago, were $20 higher, roughly. Is there a point where it's too much? How do you gauge that, and how do you watch how that maybe influences what happens in terms of demand, supplies, and that relationship?
Sure. So I guess a couple of comments. Number one, this is the week after Memorial Day. So we're just coming off kind of what you think of as the official kickstart of or I should say the unofficial kickstart of the grilling season. It was a shortened week, right, in terms of harvest. So I think that comes into play. You had fewer harvest days. So I think both of those things probably come into play. To your question, though, I always say that, price is not fixed, right? Price is fluid. And, if prices are that strong, then I think we have to just remind ourselves that, that's the price that is clearing this market right now. And what that speaks to is strong consumer demand. So I always look at strong prices as good news for livestock producers, right? I would be much more concerned if we weren't seeing high prices. So I know there's concern about them being too high, but I usually kind of respond, well, when we get to that point and people start making consumption, pattern changes, then price will probably adjust, as it needs to. So
it's definitely interesting watching where these price levels are going and to see the elasticity and the strength in consumer demand. At this point, we've not seen disruption because of price.
Not yet. In fact, I think, we've talked about it before. A lot of discussion's been about tight cattle supplies, and they are tight. But, we've made up for a lot of that with weights. And if you look at production levels, they're really not down. And we're still seeing these price levels. So that speaks to strong consumer demand, which I think has been a little bit underappreciated probably in the market with everything else going on.
Hog futures are seeing some strength as well. We're also seeing, in terms of demand, I would assume everybody on the protein side of things is happy to see summer grilling season and this opportunity to boost domestic demand.
I think so. The seasonality is always a pattern that you don't bet against, I always say. And, 5 and 10 years ago, Meghan, I would have said that, we really see kind of the seasonal peak in the spring, and particularly on the cattle side, we see a pullback as we move into June. The last few years, we really haven't seen that as much. Those prices have stayed strong through summer, and they kind of pull back seasonally some in the fall. So I think, the fact that it's kind of across the board, benefits all these proteins, right? As the cost of one protein, goes up, it kind of supports the other in some sense, right, on a relative basis. And you combine that with the fact that we're in, late spring, early summer, and all those things line up for some pretty bullish sentiment right now.
Totally off the wall question, but we've seen this passion for pellet grills or smokers or all of these really fun tools. And I would say a lot of it came right during COVID. A benefit of COVID was people learning how to cook things more unique at home. Does that help us have a more consistent demand strength throughout maybe less traditional grilling seasons, right? Like maybe people are grilling longer. I know, my husband will smoke and grill meats from January to December, and it doesn't matter, very rarely will weather interfere. Does that kind of passion and popularity help when we think about keeping consistent demand throughout the year?
That's a really, really good thought. It's one of those things, there's not something tangible I can point to, but I think it's pretty safe to say that during COVID, a lot of people, they learned a lot more about preparing and consuming meals at home, with meat being a key piece of that. And you make a great point about some of the newer methods. And I've got some friends that have gotten into what do they call those flat things that are so popular? There's so many of those types of things out there now. So it's kind of funny. It may be that we saw some product development, that was kind of spurred during COVID, and it's impacting demand some now. I think that's a good hypothesis.
All right, let's talk slaughter numbers. Holiday shortened week. So when we're thinking about volumes, that obviously comes into play. How did things stack up this week?
So yeah, I got to remember that with the holiday week, you had one less harvest day, and of course, you make up for that in some cases with Saturday slaughter or something like that. But just kind of walking through numbers quickly. So for this week, so the week after Memorial Day, hogs were projected to be down about 8%. I'm at 2.16 million head. Year to date is probably a better thing to look at right now, given that we're comparing a shortened week to a full week before. So it's down 2% year to date. Cattle slaughter down 16% from last week, 477,000 head, but running a little over 6% lower year to date. The one I want to kind of point to for a second and talk about is beef cow slaughter, which has just flat out been a real story, and has surprised me how low it's been. We're kind of on track for about a 10-year low in beef cow slaughter if things continue. Down more than 17% from last year through about the second week of May, which is the most recent weekly data that I was able to pull.
When you look at the beef cow slaughter, I think there's a couple of really interesting elements that come into there, right? We're pulling from a smaller pool, correct? Because we were slaughtering so many cows and contracting for so long. How much do you watch that in terms of potential for maybe not growth, but retention and maybe a slowing to contraction, or maybe we're starting to hold back and starting to keep some of those cows maybe that weren't as productive or whatnot in terms of operations?
Yeah, really good question. So start kind of with the beginning. The cow herd is smaller, so holding everything else constant, you expect cow slaughter to be down a little bit for that reason. Now, certainly not 17% like it's been so far, but that is a factor. Another point that I'll make, we really culled this cow herd hard 2021, 2022, and 2023, especially 2022. But I think we were north of 11% of January 1 numbers all three of those years, and I think we were north of 13% in 2022. So I have to think that probably that means that we've done a fair amount of culling during that time period. So we've made some of the easy culling decisions. The cow herd probably got a little bit younger because you tend to cull older cows. So I think that also feeds into it. But the other thing, Megan, that I think we just have to be cognizant of is that this is an extremely high calf market. And you kind of put yourself in the shoes of a cow calf operator. And when they're making culling decisions, you're kind of going to err on the side of trying to get another calf out of those cows. You just are, because those calves are potentially very valuable, despite the fact that the culls are also pretty valuable right now. I think you and I talked maybe even 6 weeks ago. We talked about heifer retention as best we could gauge. And honestly, my story really for the first 3 months of 2025 was that I didn't think there were enough heifers out there coming into 2025 for us to see an increase in beef cow numbers to start 2026. But I also didn't think we'd see beef cow slaughter down as much as it's been so far in 2025. So the honest truth is, while it's not driven by heifer retention, I think if we continue to see these cow slaughter numbers run as low as they have been for the rest of 2025, we start talking about steady beef cow numbers, maybe even a slight increase going into 2026. Again, not driven by retention last year, but just driven by the fact that we're just simply culling fewer beef cows right now.
How valuable does that make that July cattle inventory report to get the mid-year check-in to see where things are at this point?
It's going to be valuable, for two reasons. Number one, there is the cow element, which is kind of what we're talking about now, but it'll also be another cut at heifer retention, right? So, we can look at heifer slaughter kind of on a monthly basis. That tells us something. We look at those quarterly cattle on feed reports where we see what percent of on feed inventory heifers are, but we'll actually get a measure of of heifers held for beef cow replacement as of July 1. And that'll be a pretty key piece for us too. Now, in all fairness, that number probably impacts 2027, every bit as much, if not more than 2026 at this point, right? Heifers that are held on the back end of 2025 probably don't wean calves until 2027, but it gives us a sense of direction for sure.
Dang, the biology of it all. You're bound by what you can do and very restricted, I guess, is probably a better a word in terms of how fast and how expansive we can grow the cattle herd when the time is right.
That's another good point. I'll kind of say this about it. When you think about that producer decision, that culling decision, you're thinking about, okay, culling decisions in the present time, and you're thinking about heifer retention, right? From a producer perspective, that cow that I keep another year, assuming she weans me a calf, I get a calf the very next year. If instead, I cull her and hold back a heifer, right, I'm probably 2 years away from that first calf. And I think that does matter, especially in a strong market, right? It matters more now than it would have, 3 or 4 years ago.
We're going to talk a little demand. Cold storage numbers came out actually last week. And as we take a look at supplies that are in storage, what are you seeing in terms of the major proteins?
Walk through these, and I like to make this point just for our viewers. So these are kind of done the end of the month. So we're kind of at the end of May now. This came out last Friday, but these are really estimates of, in this case, meat in cold storage, the end of April. So we'll kind of talk through those. So we'll start with beef, down 2% from the end of March, and then 2% from a year ago. So 2% from the end of April 2024. Frozen pork supplies were 11% higher actually from the month before, but down 9% from April of 2024. Grab chicken too, just kind of for the comparison. 2% below March of this year, but then 2% above April of last year. Thought it'd be neat to look at eggs. You and I talked a couple months ago about how expensive breakfast had gotten when we're talking about egg prices a lot. Frozen egg supplies were 1% higher the end of April versus the end of March, but but 51%. So roughly, the supply was roughly half what it was a year ago in terms of frozen egg supplies. So those are kind of some of your major proteins, Megan.
It's interesting to look at how high path avian influenza has impacted both chicken supplies, but then also less impactful when we think about the broiler industry because they're not in facilities as longer than in the time it's going to take to regrow and rebuild egg supplies as well.
Absolutely. AI absolutely hit, the laying sector much harder than the broiler sector. And of course, I think while that's the supply side is a big piece of it by all means, I think we have to also recognize the demand side, and it's also been strong. And although we don't think about eggs as a direct competitor in the same way we would other meats, I think it is a source of protein, and I think there probably is some link between meat values and potentially the demand for eggs.
Before we get out of here today, I do want to talk a little bit about trade. We've had some conversation. It's just the back and forth trade and tariff game. There was a ruling this week that said the tariffs weren't legal, I think is just in a very basic terms. An injunction was put into place, which means the tariffs go back into place. Not necessarily, Kenny, talking about the tariffs specifically, but the inconsistency or the back and forth. How much does that impact as we're trying to develop and grow markets to make sure we're finding solid trading partners to know that we have a place for product and to be able to diversify that export sector?
Well, I think I would say this just kind of in a general sense. Markets don't like uncertainty, and that's what a lot of this has really created, right? We've had some kind of start-stop type things going on. You've seen the markets respond to things, that they expected to happen, and then they would readjust as that changed. So I think it's adding a lot more uncertainty. And when you hear an economist say uncertainty, they typically associate that with volatility, and we're seeing both. We're in a strong market, but it's one that has also been volatile. We've had incredible prices, but we've seen some fairly short-term pullbacks as well. And I think uncertainty has caused a lot of that.
We saw massive volatility in this week, rumor based in terms of the cattle market specifically. Should a scare like that maybe jolt a response to think about risk management and making sure that your operation is protected in the best way possible, knowing that something like that could trigger a market response like we saw only temporarily, but we did still see?
Sure. So what we saw on Tuesday, right, was the market immediately trying to price in what it perceived to be some very bad news, right? And that happens quickly. And, we can argue about how efficient that is, but immediately the futures market is going to respond and price in something like that. So as it turned out, we've largely gained that back. It didn't happen. But like we've said many times, it's a bull market, right? But, it's also a good time to think about protecting yourself from, protecting yourself from something that can't be predicted. And that's a perfect example, right? I think I said last time we talked that I get a lot more questions about risk management after prices have already dropped, and then it's too late, right? But, the best time to think about risk management is when the market's offering you something that you find attractive. That's the best time to move, obviously.
Kenny, it's always great to see you.
Good to see you.
We'll catch up in June.
Sounds good.
It's just around the corner. To have our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnews.com. You can also submit questions and comments. And for commodity market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.